welcome to Agoracom Small Cap Breaking News, your daily go-to source for the best small cap headlines for over 65 million investors since 2007. And this is the Deep Dive, where we take that breaking news and, well, cut straight to the most compelling information for investors in the small cap market. Our mission today is basically your shortcut to being exceptionally well informed. We're zeroing in on critical financial and drilling results that absolutely merit a closer look, highlighting those all-important stock symbols and key quotes directly from the source. Forget the noise. We're here to unpack the specific data points that move markets and shape investment decisions. Okay, let's unpack this. We've got some truly exciting, potentially game-changing updates from the mining sector today. Our first story takes us to British Columbia's renowned Golden Triangle. I mean, this is a region globally recognized for its incredible mineral wealth, right? A consistent producer of world-class deposits. The headline we're diving into reads, Kingfisher Metals reports significant copper-gold drill results at British Columbia's Golden Triangle. This is exactly the kind of news that gets investors leaning in.
That's Kingfisher Metals, trading under the symbol KFR. And what's truly compelling here, and what investors really need to get, are the incredible results from their drill hole HW25004. They've intercepted a continuous 557.8-meter section, grading 0.64% copper equivalent, CAVQ. Now, for those maybe less familiar, copper equivalent, well, it's a common industry term. It means they've converted the value of all the metals found, copper and gold here, into a single copper percentage. It gives you a clearer picture, of the overall economic value. And that 0.64% CuEq over that kind of width, nearly 560 meters, that's significant. Many big operating copper mines average below 0.5% CuEq. So yeah, this is a high quality intercept for the scale. But wait, it gets even better. Within that massive zone, they hit a high grade core, 234.35 meters, grading a full 1.00% CuEq. What's fascinating here is just the sheer scale and grade they've reported, especially given its location in the Golden Triangle, which is already known for big discoveries. This finding, well, it significantly expands the known mineralized zone, pushes it 140 meters deeper than they knew before. That really suggests the potential for a large-scale, long-life copper-gold deposit. And crucially, the presence of bornite, that's a high-grade copper mineral, usually richer than chalcopyrite, it's often associated with elevated gold too. That combination is a key indicator for investors, pointing to potentially higher metal values and maybe even better metallurgy down the line.
Right. Better economics, potentially. And CEO Dustin Perry, he really drove this home with a statement that I think resonates with investors looking long term. He said, "These initial drill results confirm our exploration concepts with consistent vertical grade and expansion of the bornite-rich stockwork." Okay, and then this de-risks the broader project targets and strengthens our conviction that we're advancing a value-creating asset for shareholders.
So what does this all mean for you, the investor? It's not just about de-risking, right?
Exactly. It's about validating the potential for maybe a tier 1 scale asset.
In a world that's really crying out for copper.
Absolutely. With electrification, renewables, demand is just relentless. These results, given the length and grade, could position Kingfisher as an attractive target for major producers looking for future supply, especially in BC. Good jurisdiction, yeah. A significant step then. Okay, moving from base metals in BC, let's pivot. Let's talk gold. We're heading to Northwest Ontario now. A gold play showing some really compelling progress. The headline here, Gold X2's close-space drilling at Moss points to higher grades and faster path to feasibility.
This is Gold X2 Mining, trading on the TSX Venture Exchange as AUXX. So their grade control drill program at the Moss Gold Project, it's reporting multiple near-surface intercepts. And the key detail, the really important part for investors, is that these grades are generally higher than predicted in their current resource model. That's critical. Let me give you some specifics that really stand out. 50.85 meters of 2.18 give or take AO, that's grams per ton gold from just 1.15 meters down. Very shallow.
Wow, right near the surface.
Exactly. And then another hole, MMD 25201, hit 49.85 meters of 1.54 grama TO from only 0.7 meters. And that included a richer zone of 36.3 meters of 2.03 grama TO, plus another hit deeper down, 16.0 meters of 3.14 grama TO from 76 meters. So if we connect this to the bigger picture, these higher than model grades, they de-risk the project quite a bit ahead of feasibility studies, they give better resolution for mine planning, and strongly support potential resource upgrades, moving from inferred, which is more conceptual, to indicated status.
And that move from inferred to indicated, that's a big step up in confidence, right? Makes it more attractive for financing.
Precisely. It significantly strengthens the project's economics on paper and reduces perceived risk. And the fact that a lot of this starts near surface, that's very favorable for early mine scheduling, potentially lower stripping, quicker cash flow.
Makes sense. And the CEO, Michael Henriksen, he echoed that, didn't he? Noting that gold grades are generally higher than those predicted in our current resource model, and that these results are de-risking targets and strengthening our conviction in Moss's potential. Okay, those near-surface higher grades sound great for the economics, but gold prices fluctuate, costs go up. How robust are these early results likely to be, and how long does it usually take for those resource upgrades to actually, translate into shareholder value?
That's a really good question. Look, consistency is key. Feasibility studies will need to confirm these grades across the broader deposit. Higher grades at surface definitely provide a buffer against rising costs, that's true.
Yeah.
But the timeline, yeah, from getting an indicated resource to actually making a production decision, that can still take several years. Permitting, financing, detailed engineering, it all takes time. But what these results do is make that whole process look much more appealing. They enhance the economic models right from the get-go, making success more likely.
All right, so for you, the investor, it's not just hitting gold, it's hitting better gold than expected, close to the surface. That simplifies things down the road and could seriously improve early cash flow. It's a powerful signal about the project's potential economics. Okay, let's stay in British Columbia for our next one, but shift focus slightly. A company expanding its gold footprint. This news is from Brixton Metals. The headline, Brixton Metals extends near-surface gold at Trapper target, signaling room to grow at Thorn project.
That's Brixton Metals, ticker BBB. Their latest drill results from the Trapper Gold target look quite promising. Hole THN 25335, for instance, hit 29 meters, grading 1.75 grams per ton gold, starting at about 72.5 meters down. And within that, they had higher grade bits, like 3.35 gram over 3 meters. Solid near-surface stuff. Now, what's interesting, what differentiates these results, is the location of this hole, THN 25335. It's on the southeastern edge of the main zone.
So it's pushing the boundaries out.
Exactly. It's extending the known mineralization that's critical for step-out targeting, shows the deposit isn't closed off in that direction. And there's more. They're finding gold in multiple host styles, including a newly identified feldspar porphyry. That's significant because finding gold in different rock types, well, it suggests a potentially more robust, widespread mineralizing system, opens up new areas to explore.
Broadens the potential target area.
Right. And again, like we've seen, many intercepts start near surface. Always good news for potential future mining scenarios, lower costs up front. So it really raises the question, how far can this expansion go? The early signs suggest pretty significant growth potential at Trapper.
And the chairman and CEO, Gary R. Thompson, he affirmed that, saying, drilling at the Trapper gold target continues to show promise for expansion, notwithstanding structural complexity. And crucially, he added the target remains open for expansion in multiple directions. Okay, expansion sounds good, but he mentioned structural complexity. For someone not deep in geology, what does that typically mean for mining? Does it add cost or difficulty?
Yeah, that's a very astute point. Structural complexity basically means the geology is jumbled up lots of faults, folds, fractures. It's often where you find high grades, actually, but it means the deposit isn't a simple flat sheet of rock. For mining, it can mean more complex mine planning, maybe more drilling to figure out the geometry, perhaps more selective mining techniques. So yes, it can potentially increase operating costs compared to a simpler deposit. But if the grades and the overall size are good enough, these complexities are definitely manageable. The fact they're still expanding despite it suggests the system could be quite robust.
Got it. So for you, the takeaway is clear. This looks like it's about adding punnage, adding optionality. You've got these shallow gold hits, plus an active pipeline assays are still pending from their Catalyst and Tempest copper gold targets. Those could be additional catalysts down the road, offering sort of multiple shots on goal. All right, let's shift focus now, head north to Alaska, a frontier known for huge mineral potential. Tectonic Metals is making waves there with what sounds like a really interesting discovery, a blind target. The headline is direct. Tectonic Metals hits high-grade gold in first 2025 hole at Alaska's Flat project.
Tectonic Metals, trading as TECT on the TSX Venture Exchange. And yeah, compelling results from their first 2025 hole at the Alpha Bull target. We're talking 2.23 grea gold over 41.15 meters. That includes a really nice high-grade section, 4.0 gram over 21.34 meters, with even a peak intercept of 13.25 gram over 4.57 meters. That's in hole CMR 25035. What's really fascinating here, as you said, is finding that kind of grade and thickness from a target with no surface expression, a blind target.
Meaning you can't see it on the ground.
Exactly. No outcrops, no soil anomalies pointing the way. Discovering something like this is challenging, relies heavily on good geology and geophysics. It's impressive work. This specific hole, it tested the eastern edge of their northern fence at Alpha Bowl. It stepped out about 250 meters along strike and 200 meters east from a discovery they made in 2024. So strategically, this is important. It confirms continuity over a good distance, suggests the system is bigger, and it's still open despite being hidden. It really supports their idea of a district-scale, intrusion-related gold system. Those are the types that can host really large, long-life deposits, often with high-grade cores. Looks like Tectonic might be onto one here.
And Tony Rita, Tectonic's co-founder, president, and CEO, highlighted that, didn't he? Alpha Bowl is a blind target, and yet in only a few drill holes, we've been able to intersect high-grade gold mineralization. And importantly, he noted the results imply the eastern edge isn't defined yet, and these high-grade zones might occur at scale. That's definitely a strong start to their season. But with a blind target like this, what are the main risks or challenges in, figuring out how big it really is and eventually mining it?
Yeah, that's the key challenge. The biggest one early on is the cost and uncertainty of exploration drilling. You're essentially drilling blind, looking for mineralization without those surface clues. So defining the full extent needs a lot of drilling, which costs money. And then from a production view, you really need to understand the geology, the grade continuity, the structural controls, all that complexity we talked about earlier to design an efficient mine. But the flip side, the potential reward is huge, unlocking a major deposit others might have missed. And these high grades they're hitting certainly help justify the exploration spend and reduce some of that initial risk.
Makes sense. So what does this all mean for you, the investor? It seems like a strong start that ticks several boxes, evidence of scale, good development potential, and a strong pipeline with 47 more Phase 1 holes pending. That's a lot of news flow coming.
It really is. It suggests this could be a pivotal year for the Flat project as they work to define the system. Could be a significant new gold camp emerging.
Okay, our final breaking news item takes us to CuEq, a province that's really becoming a hotspot for critical minerals, especially lithium. And this company is reporting some, well, truly massive intervals in the lithium sector. Commodity essential for the EV revolution, right? The headline, Q2 Metals reports widest pegmatite interval, yet a CuEq lithium project moves toward first resource.
That's Q2 Metals, trading under QTWO on the TSX Venture Exchange. And the standout result here. It's visual, we need to stress that assays are pending, but it's remarkable. Q2 Metals has cut its thickest zone of spodumene-bearing pegmatite to date at their Cisco lithium project. One continuous interval measures a staggering 457.4 meters in hole, CS 25044.
457 meters continuous.
Continuous. Now let's break that down. Pegmatite is the host rock. Spodumene is the key lithium mineral inside it, so hitting nearly 460 meters of the right rock type, visually showing spodumene, even before assays, that is simply massive in mining terms. This directly supports their plan to publish an initial inferred mineral resource estimate soon. And remember their conceptual target. They were thinking 329 million tons, grading 1.38% Lero. Lero is lithium oxide, the standard measure. And they'd already hit big intervals before, like 347.1 meters at 1.35% Lero in hole 21.
So this massive new visual hit builds on previous success.
Exactly. And connecting it to the bigger picture, if the assays confirm decent grades in this huge interval, it could convert a big chunk of that conceptual target into a compliant inferred resource. That's a major milestone for any junior explorer, especially in the hot lithium market. Hitting these numerous thick intervals close together gives much better confidence in the shape and volume of the deposit, critical for that first resource. Plus, the project has good infrastructure nearby highway, rail, and the company says they have a strong treasury to keep drilling aggressively.
And the management comments reflect that excitement. Neil McCallum, VP Explorations at Hole 44, has far exceeded our expectations and stressed it's still open. And the president and CEO, Alicia Mill, noted the visuals reinforce the long-term potential of the Cisco project and that Q2 is well-positioned financially. Okay, the visual scale is undeniable. 457 meters is huge. But since assays are pending, what's the difficult range or variability between visual estimates and the final lab results? How much weight should investors put on visuals alone?
That's a vital question, always, with early-stage results. Visual estimates for spodumene, especially in established areas, can actually be quite reliable if done by experienced geologists. Often, geologists might even be a bit conservative visually. So, while there's always some uncertainty, sometimes the assays come back even better than the visual estimate. But look, even if the final grade across that 457 meters comes in slightly lower than an optimistic visual guess, the sheer volume is so immense. it still represents a potentially massive amount of contained lithium. So while assays are key for confirmation and final valuation, an interval of this scale significantly de-risks the volume part of the equation for a future resource.
Right. So for you, the investor, while you wait for those crucial assays, the sheer visual scale here is hard to ignore. Combine that with good infrastructure, a clear path to a resource, strong funding. It definitely positions Q2 Metals as one to watch very closely in the lithium space.
Absolutely. These updates really underscore the dynamic nature of small cap exploration. We've seen potential scale in BC copper gold, higher than expected grades speeding up Ontario gold, impressive blind discoveries in Alaska, and now these visually huge lithium hits in Quebec. These kinds of early compelling results can genuinely signal significant shifts in a project's outlook, which raises that important question, right? In such a fast-moving market, how quickly can these promising drill results actually translate into tangible value for shareholders? What are those key inflection points investors really need to watch for?
Yeah, exactly. So what does this all mean for you? It means today's deep dive has armed you with specific high-impact data points, the grades, the lengths, those stock symbols, the CEO commentary, the strategic context. All crucial if you want to dig deeper into these companies yourself. We've tried to peel back the layers beyond just the headline flash. Now, as these companies keep exploring and developing, the real test, of course, is consistency. Can these impressive early numbers hold up or even expand? That's how headlines turn into long-term value. Which of these stories will be the next major discovery to really capture attention and potentially redefine its part of the market? That's the exciting part of the deep dive, isn't it? The ongoing discovery. Thanks for joining us for this deep dive into today's small cap breaking news.